Imagine, you borrow money once, just once, and even after you repay it, you keep paying forever. Not because you failed, not because you were reckless, but because the system was designed so that time itself works against you. Here's the paradox. The harder you try to escape debt, the more interest tightens its grip. So here's the real question. Is interest a tool for growth, or a trap nobody was meant to escape? History and context. Interest is not new. It's older than banks, older than paper money. 5,000 years ago, farmers borrowed seeds. They repaid with more seeds later. That extra amount? That was interest. At first, it made sense. Time had value. Risk had cost. But something changed. As money evolved, interest stopped being compensation. It became a system of extraction. Today, almost every adult on Earth lives inside it. Mortgages, credit cards, student loans, EMIs, and the most dangerous part? Most people never learn how interest actually works, how the trap works. Interest feels small. Just 12%. Only 9%. Minimum payment due. But interest doesn't grow like wages. It compounds. Think of it like this. You're digging a hole. But every night, the hole digs itself deeper. Interest earns interest. Debt feeds on time. Lenders love time. Borrowers fear it. Why? Because compounding works asymmetrically. When you save, growth is slow. When you owe, growth accelerates. Miss one payment? Interest multiplies? Pay only the minimum? The clock resets in the lender's favor. You're not failing, you're being outpaced. Now, let's zoom out. Look at the system as a whole. Banks don't need you to default. They need you to never fully escape. A borrower who repays quickly is a bad customer. A borrower who pays interest for 20 years? That's perfection. This is why. Student loans delay adulthood. Credit cards normalize revolving debt. Mortgages stretch across lifetimes. Entire generations are trained to accept permanent obligation. And here's the revelation. The economy is built on outstanding debt. If everyone became debt-free tomorrow, the system would collapse. Interest isn't a side effect. It's the engine. Consequences. This changes everything. Why wages feel stuck. Why saving feels pointless. Why work never seems enough. Interest silently transfers wealth from borrowers to asset holders, from labor to capital. You don't need corruption for inequality to rise, you just need compounding. Over decades, interest concentrates power without anyone voting for it. And the cruelest part? The people who need money most pay the highest rates. Risk is priced in. Mercy is not. So here's the truth. Interest is not evil, but it is indifferent. It doesn't care about effort, or morality, or fairness. It only obeys time. Those who understand compounding try to own assets. Those who don't rent their future. The system won't warn you, because it doesn't need to. So let me ask you, if interest guarantees someone always pays more than they borrow, was debt ever meant to be temporary? Or was the trap always the point? Comment below.